Is crypto a revolutionary new financial system, or one of the biggest bubbles of our time waiting to burst? At its peak, Dogecoin, a joke coin inspired by a meme, was worth more than Ford or BP, with a market capitalization of around $85 billion. But then within months it had collapsed by 90%. Back in November 2021, the total crypto market value reached a staggering $3 trillion. But a year later, it had plunged under $900 billion, a loss of more than $2 trillion in paper wealth. No factories closed, no crops failed, just confidence evaporating. Crypto is a self-referential system, prices rising because people expect them to go up. Momentum fuels optimism, and optimism fuels demand. But if crypto is a big bubble, it's a pretty resilient bubble at that. Every crash seems to make it come back stronger. 15 years after Bitcoin's creation, crypto is still here more influential than ever. Political parties now accepting crypto donations, major firms offering crypto-based services. Even central banks who once expressed skepticism are experimenting with their own digital currencies inspired by the blockchain technology. Now, for many people, crypto remains a bit of a mystery. We've never bought a coin or used crypto to buy anything. In fact, go into a shop, try and buy some milk and eggs, Bitcoin won't help you. But at the same time, crypto is always in the news with its booms and busts. And on one side are the true believers, those who see it as a future of money, freedom from government control, and an opportunity to get rich. But on the other hand are the skeptics who argue its main purpose is speculation and, in many cases, crime. And it is worth asking, what actually is crypto? Crypto is any kind of digital currency operating independently of governments using public blockchain technology. Now, the important thing is there are many different types of crypto. Stablecoins are mostly backed by assets like the dollar, gold, or bonds. Then you've got meme coins, which have no intrinsic value. They tend to ride on social media hype, much more likely to boom and bust. And also you've got something like Bitcoin, at the risk of mixing metaphors, the gold standard of crypto, you could say. And this has limited supply, which you can mine to try to get the last remaining units. And people complain it uses a lot of power, damaging the environment, because you have so much computing power to get it. But anyway, Bitcoin has a reputation as a hedge against inflation, though its price remains highly volatile. Of course, if you had bought any Bitcoin back in 2009, you would be genuinely rich today. In mid-2025, Bitcoin peaked around $110,000, and at that time, a Nasdaq survey found that 68% of US crypto investors believe Bitcoin could hit $200,000 by the end of the year, a sign of continued optimism. Yet today it has fallen back to 83,000, even as gold reaches record levels. Now, critics point out that less than 1% of global transactions use crypto for everyday payments. It's much more common on the dark web, where anonymity is valued. Now, most people don't buy crypto to be able to spend it. They buy it hoping the price will go up. Some see it as a diversification of their investment portfolio. Now, you could argue the world just doesn't need Bitcoin to buy things. As Paul Krugman once put it, cryptocurrency is a solution in search of a problem. Now, you could argue the same about stocks, that people buy just hoping that the value goes up. But at least with shares, they represent companies that make profits and pay dividends. Crypto doesn't. So when interest rates were zero at the end of last decade, savings and bonds offered really tiny returns. So it's perhaps inevitable that people speculated on things like crypto, seeking higher gains. But when interest rates rose at the end of 2021 and 2022, investors, of course, wanted to return to real assets like bonds, because who wants to hold crypto, which has no intrinsic yield, when safer assets pay 5%? And that's why crypto fell so sharply as interest rates went up in those years. Now, even Warren Buffett, the great investor, has dismissed Bitcoin as rat poison squared. He sees both crypto, and I should say gold as well, as unproductive assets because you don't get anything from them. Now, to maximize returns, many retail investors borrow to buy crypto. around 74% of total crypto trading now comes from derivatives, leveraged bets that magnify risk, which can make you huge profits but also make a big loss. And if interest rates go up, leveraged positions can unwind, forcing mass liquidations and most sharp drop in prices. Now, people do like to say that crypto is kind of a hedge against inflation. It can't be debased by the central bank printing money. But history does actually show that inflation and interest rates usually make crypto fall in value, not rise. Now, interesting case study this year, February 2025, Argentina's president Javier Milei mentioned the meme token Libra on social media. Its price skyrocketed from 21 cents to over $5 within a few hours, but before collapsing a few days later, leaving many investors with large losses and fraud allegations. Though, of course, some bought just before the announcement and sold at the top. And that's a problem with these crypto meme coin bubbles. Some win by buying early and getting out early, but it leaves many people nursing big losses. To some extent, it echoed the earlier Trump-themed coins launched in January 2025, another boom and bust built entirely on hype. And these cycles share the same kind of psychology you see in historical booms and busts: the desire to get rich, fear of missing out, the belief that this time is different. Crypto's also become political. The industry is now one of the largest donors to US election campaigns. Under the new Trump administration, regulators have really taken quite a light touch. The Department of Justice has disbanded its crypto enforcement unit. The White House has signaled support for blockchain innovation. And this shift may well attract a lot more speculative capital, potentially fueling the next boom, but of course risking a crash in the future too. Now, unlike stocks or property, crypto isn't backed by income or real assets. There's no lender of last resort like with the central bank. Its value depends entirely on the belief or the idea that someone will be willing to pay even more to buy it tomorrow. And if that belief fades, then prices can fall rapidly. However, calling all of crypto a bubble misses something important, because it's true that bubbles burst and then vanish, but Bitcoin and blockchain have endured for 15 years, and this persistence suggests something deeper than speculation. So one advantage, or one attraction of crypto, stems from a distrust in traditional finance. After the 2008 credit crunch, many lost faith in banks and governments. Crypto offers a form of money that can't be printed or frozen, one that you can own independently of any state or company. Even if 95% of today's tokens disappear, the blockchain architecture could remain. The dot-com crash wiped out many firms, but left us with Amazon, Google, and the modern internet. Meme coins may well be jokes, but stable coins are becoming genuinely useful. They're generally pegged to assets like the dollar, treasury bills, or cash, and they can be used for remittances and offer protection against inflation in countries like Turkey or Argentina. And for people sending money from one country to another, you can miss out the middleman, and it can be more efficient to save money. Also, for many millions, stablecoins in theory could be a digital alternative to unstable national currencies. Like you see in Turkey and Argentina, here in the West, we're much more used to the idea of inflation being relatively low and currencies low, so there's less desire to find an alternative. Now, ironically, a big question for the future of crypto is actually government regulation. It's ironic because crypto wanted to be completely free of any government influence. But if you take Europe and the UK, they're moving to limit retail borrowing for crypto. But in the US, after heavy industry lobbying, oversight has definitely been loosened, and the US aims to become the crypto capital of the world, which of course could drive more capital flows into it, perhaps causing another boom and potential bust. And also with crypto, it is linked to other markets because, of course, in the US, we're seeing a big rise in stock prices, driven largely by an AI boom. But if the earnings of AI firms tend to be disappointing, not quite as magnificent as some are hoping will happen, then that could really cause a bit of a crash in AI stocks. And I think that would bring crypto down with it, because there's a strong correlation between a big falling share prices and falling crypto too. So the big question is crypto a bubble? Well, you can give two different answers. Crypto definitely does contain bubbles, speculative manias around coins with no purpose. And if you're buying speculative crypto with borrowed money, you risk losing everything. But it doesn't mean that the entire system is a fraud. What's more likely is an evolution. Speculative tokens will die out in a big crash, while blockchain technology continues to spread into the mainstream finance. So what do you think about the crypto? Is it a bubble or a financial revolution in disguise? And if you like this video, leave me a donation in Bitcoin. Only joking, I don't have any Bitcoin, never used it. Don't really see the point. Anyway, if you enjoyed this video, do subscribe and let me know what you think.